Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. $62 silver. Is this possible? Is it impossible? We know that in 2011, not even 10 years ago, silver hit $50. And in the turn of the 70s, 80s, we also saw $50 silver. So, what was happening during those times is happening right now exactly the same. It's just more severe right now with this virus outbreak. So the chance of higher prices than $50 is actually much more likely. Instead of 500 million or 500 billion stimulus package, we're putting together a $3+ trillion package. Triple the amount. So what that means is we are on path for an extremely high silver price coming. And that's what this article is talking about. $62 an ounce bull case for silver. So with that said, let's jump into it. The article will be in the description. Make sure to smash that like button. Let's see if this video can get 100 or not 200 likes. You know what? 250 likes. Smash the like button. Let's break that like goal. Anyways, the bullish case for silver is strengthening. Fundamental undercurrents point towards major changes in the global and American economy. Monetary expansion, potential inflation, and the gold to silver ratio suggest now might be silver's time. Are the stars aligning? I am increasingly bullish on the prospects for silver for three primary reasons. 1. Monetary extravagance should benefit hard assets. 2. Inflation may be on the horizon. And 3. The gold to silver ratio is at extreme levels. So let's talk about monetary extravagance. Since the global financial crisis of 2008 through 2009, the Federal Reserve's balance sheet has grown nonstop. Indeed, from the depths of the crisis to the middle of the expansion, U.S. Treasuries held by Fed rose from about $400 billion to $2.4 trillion, like I was explaining earlier in the video, while the U.S. experienced the greatest economy ever towards the end of 2019. The Fed's U.S. Treasury holdings could only be reduced to about $2 trillion. This was the best of times. Today, we are in the worst of times. And U.S. Treasury holdings have skyrocketed to about $4 trillion within the next couple of months. Of course, Treasury holdings is only proxy for the countless support measures currently managed by the Federal Reserve. The list is long, with the Fed now buying corporate debt, providing open swap lines, and basically accepting any financial trash as collateral for dollars. Federal Reserve actions highlight the global dollar shortage. Consequently, to help fill this hole, the world has witnessed the fastest ever year-over-year growth of U.S. money supply ever. While much of this new money remains trapped in the banking system, a meaningful portion finds its way into the markets. Money supply has a strong correlation, likely causation, with asset prices. This likely explains the huge relief rally we've witnessed since March 23rd lows from the S&P 500. Given the Great Depression era economic fundamentals, it is likely the massive monetary expansion continues. I could show dozens of graphs showing a collapse in GDP, industrial production, sentiment, and economic activity. Instead, I'll show just one, the employment population ratio. While it has been deteriorating since its 2000 peak, the number of employed people as a percent of the total U.S. population has utterly collapsed almost overnight. In the middle of 2000, 65 people for every 100 were contributing to the economic pie. This number has dropped to 51. Said differently, in 2000, the productive activity of 65 people had to cover entitlements of 35 dependents. Today, each working person must cover the entitlement of one non-working person. This results in enormous long-term shortfalls. Since it's politically unpalatable to cut entitlements, it's very likely debt expansion, and thus the monetary expansion continues unabated. It must, or the political and social system collapses under its own weight. America wants the champagne lifestyle that has a beer budget. I love that. America wants the champagne lifestyle but has a beer budget. The rest, therefore, needs to be subsidized with debt and a covert economic policy to suppress real yields. It has worked so far, but faith in central banking grows ever weary. As this continues, the opportunity cost of holding precious metals, gold and silver, shrinks. This provides a bullish long-term case for both metals. Number 2, inflation on the horizon. Currently, we are experiencing epic deflationary pressures. Corporate revenues have collapsed as consumption has imploded. Savings rates have jumped, and we are teetering at the edge of a catastrophic debt deflation. The one card holding up the house is massive government and Fed intervention. In the end, perhaps CPI numbers might not show actual deflation. Nevertheless, the pressures are immense. The world is in the early stages of a new experiment to help support the economy: helicopter money. There is growing chatter about basic income provided to all U.S. citizens. While throwing money at the general population might be politically and economically desirable at the moment, the long-term consequences are very challenging, which I've explained before. We don't have the money to do that. We're $24 trillion in debt ourselves. Given the poor history of reversing stimulus, it can be reasonably assumed that any form of helicopter money might never end. Which elected official will become the one Which elected official will be the one to tell the voting public he's taking away their monthly allowance? Doesn't sound like a ticket to the White House. I have to laugh. That was great. This means that once current deflationary pressures end, the dependence on government handouts might not. Free money directly into the hands of Americans might create inflation that central banks never could, because the middleman, example, the banking system, is removed. Helicopter money is a direct infusion of money into the economy. This has inflationary implications, which is beneficial for real assets like silver. Helicopter money isn't the only potential inflationary force faced by America. Prior to this virus tragedy, America and China were in the midst of a trade war. Simply put, one superpower was trying to prevent the rise of another. Like it or not, life is a competition of resources. Consequently, it's a competition for power and control. Despite effectively making China what it is today, current American policy is looking to contain that growth. The virus amplified that policy as it underscored the risks involved with relying on China in the supply chain. It won't be overnight, but the world is starting to reverse a trend that began decades ago. Previously, American companies offshored and outsourced production to China because it was far cheaper. The Walmartization of corporate America meant the U.S. consumer got cheap clothes, TVs, and stuff out their back was low-wage Chinese labor. While we may never transition to purely insular America-first production chains, the deglobalization will become a long-term trend. This means a return to more expensive American production and higher prices for consumer goods, in other words, inflation. Number 3, the gold to silver ratio. Between 1687 and 2019, the gold to silver ratios ranged from 14 to 99. Over this period, the average gold to silver ratio was 28. On May 15th, 2020, the gold to silver ratio was at 102, and it actually got up to 125. While it's impossible to say that any ratio is correct, history does serve as a guide for what's normal. Based on the simple historical average, the price of silver should be around $62 an ounce. Another reference point for determining the relative value of something is how much it exists. For every kilogram of Earth's crust, there is 0.075 milligrams of silver and 0.004 milligrams of gold. So, what that means is, this implies there's 18 times more silver on the planet than gold. While this figure doesn't consider mining cost, damage, or usage, the ratio is remarkably similar to the long-term average of the gold to silver ratio, both of which vastly different from the current ratio. Directionally, this provides a bullish impetus of the silver versus gold. So here's the final thoughts. While gold is more of a pure play on distrust in central banking, silver is its undervalued, more rambunctious cousin. Valuing precious metals is more of an art than science. One must rely on a variety of indicators and relationships to get a sense of where the metal is headed, and that's what I talk about in my videos. You have to get a sense of the economy, the chart standputs, the supply and demand, stock market volatility, the dollar index. There's so many different angles that influence silver's price. It is an art. So with massive monetary expansion, potential for inflation, and silver's historical relationship to gold, I believe the upside for silver could be fantastic and is worth consideration. Given its recent underperformance relative to gold, now might be silver's time. So, is it definitely? I definitely think it is. $62 silver on the horizon. Is that what we're going to see next? Let me know. Let me know in the comments. I'm curious where you think it's all headed. I definitely think that silver is extremely bullish. The gold to silver ratio is lowering. It's at 101 to 1 right now, meaning it takes 101 ounces of silver to equal 1 ounce of gold. And like they said, it comes out of the ground, or there's around 18 times more silver than gold, so the ratio should be around 18 to 1. And that's the truth. So anyways, with that said, let me know if you think $62 silver is realistic, if it's possible. Let me know in the comments. Make sure to smash the like button. We have a like goal of 250 likes on this video. I know we can reach that goal. I know it's possible. Thanks so much for tuning in, especially if you stuck around this long in the video. This was Silver Slayer. I'll see you guys soon. Peace.